Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2024, and we're diving into the third quarter earnings report of Enterprise Products Partners, a leading North American provider of midstream energy services. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Enterprise Products Partners has just released their Q3 2024 earnings, and there's a lot to unpack, from their financial performance to strategic initiatives.
Revenue and profitability overview. Let's start with the financial highlights. Enterprise reported a net income of $1.4 billion, or 65 cents per unit, which is an 8% increase from last year. John, what does this tell us about their profitability?
It's a strong indicator of Enterprise's robust financial health. The increase in net income and earnings per unit reflects their effective cost management and operational efficiencies. Additionally, their distributable cash flow, or DCF, rose by 5% to $2 billion, which supports their 5% increase in cash distributions to 525 cents per common unit.
That's impressive. How does this impact their payout ratio?
The payout ratio stands at 56% of adjusted CFFO, which is quite sustainable. It shows that Enterprise is not only generating sufficient cash to cover distributions, but also retaining a significant portion for reinvestment and debt reduction.
Operational efficiencies and future outlook. Moving on to operations. Enterprise's adjusted cash flow from operations increased to $2.1 billion. What are the key drivers behind this growth?
The growth is largely driven by their strategic investments and operational efficiencies. They invested $1.2 billion in capital projects this quarter, focusing on growth and sustaining capital expenditures. Notably, they completed the acquisition of Piñon Midstream, which enhances their footprint in the Permian Basin.
How does this position them for future growth?
Enterprise is well positioned for future growth, with their updated organic growth capital investment range for 2025 set between $3.5 billion and $4.0 billion. This reflects their commitment to expanding their asset base and capturing new market opportunities, particularly in the Permian Basin.
Segment performance and strategic initiatives. Let's delve into the segment performance. The NGL Pipelines and Services segment reported a gross operating margin of $1.3 billion. What contributed to this strong performance?
The increase was driven by higher processing volumes and improved margins, particularly in the Permian Basin. The segment benefited from new natural gas processing plants and favorable hedging impacts.
And how did the other segments fare?
The Natural Gas Pipelines and Services segment saw a significant increase in gross operating margin to $349 million, thanks to record transportation volumes and higher sales margins. However, the Crude Oil Pipelines and Services segment experienced a slight decline due to lower sales margins and volumes. The Petrochemical and Refined Products segment also faced challenges with a decrease in gross operating margin, primarily due to lower sales margins in the octane enhancement business.
Leadership insights and strategic vision. Enterprise's leadership has been vocal about their strategic vision. What insights did CEO Jim Teague share about this quarter's performance?
CEO Jim Teague highlighted the strong quarter driven by new growth assets and operational records. They set 5 volumetric records, including natural gas processing and pipeline volumes. He also emphasized the successful completion of turnarounds at their PDH plants, which are expected to enhance future performance.
What can we expect from Enterprise in the coming year?
Looking ahead, Enterprise is on track to complete several key projects in 2025, including new processing plants and pipeline expansions. These initiatives are expected to provide new sources of cash flow and strengthen their NGL value chain, positioning them well for continued growth.
Key takeaways. In summary, Enterprise Products Partners has delivered a solid performance in Q3 2024, with an 8% growth in net income and strong cash flow metrics. Their strategic acquisitions and future projects are set to enhance their cash flow and market position. John, any final thoughts on their investment prospects?
Enterprise remains a strong player in the midstream sector with a solid financial foundation and strategic growth initiatives. Their focus on operational efficiency and expansion in key areas like the Permian Basin makes them an attractive investment for those seeking stability and growth in the energy sector.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Enterprise's performance in the comments below. Until next time.